Shares of Tesla tanked today after an earlier report that the company had stopped doing a brake test on the Model 3s to hit their production targets.
The company confirming to CNBC that it did eliminate a so-called brake and roll test, but said, quote, every car we build goes through rigorous quality checks and must meet exacting specifications, including brake tests. Let's bring in Gene Munster from Loup Ventures to talk about what this news might mean for Tesla. Gene, thanks for calling in. So this comes obviously after Tesla seemed to have to stretch to make their self-imposed production goal. We've heard about some major senior engineering talent leaving. What do you make of the news today about these tests?
Well, today's news is a total non-event. I think whenever you put the words Tesla and stop or Tesla brake and stop together, it just is going to sow some seeds of concern for investors. But it's actually a positive sign that the company feels that they don't need that test to get these Model 3s safely on the road. I do want to take a step back and just quickly talk about the bigger picture of why on this supposedly great 5,000 run rate news, the stock is down effectively 10% since they hit that 5,000 number. And in my conversations with investors, is they're really looking at the run rate of the Tesla, the Model 3 manufacturing is effectively on a week-to-week basis unchanged to where it exited March. And separately, the amount of work that they had to throw in to get to this 5,000 target, the extra labor that went into it, there's extra production costs, probably means a little bit greater loss for the June quarter, which means the bears are going to have at least 3 more months to stand on this story. And that, to me, is the real substance of why the stock is trading down, not this brake test stopping news.
So one, if I get one of these Model 3s that just come off the line, I don't have to worry about my brakes, Gene? You think they're completely safe? Two, though, to your point, if they're doing all kinds of things, the tent out in the yard, et cetera, to hit the number, it raises questions about the sustainability of their ability to hit the number, and they got to hit the number in order not to have to raise capital.
Right. And I want to be clear is that I'm a believer in this story. I think that Tesla will, in fact, cross into profitability and will be one of the most successful tech stories over the next 5 years. So that said, I want to just acknowledge that the bear case on this did have some meat after this call, and that's, like you said, is that they're throwing everything they can. I think what is most important, the key takeaway, is that they are improving the pace of manufacturing. Whether or not they get to profitability, a little spoiler alert here on the June quarter, they'll probably get to profitability, but they're probably going to have to sell what's called these ZEV tax credits. Essentially, they sell them to other car manufacturers. So the bears will probably or will understandably talk about that being a negative when they report the September quarter and say they're profitable. So you really have to start, as someone who believes in the Tesla story like myself, you're really thinking about the ramp in the December quarter.
I didn't know that those were tradable assets, actually, those credits. So.
Yeah, I mean, Gene, but the broader point would seem to be that we keep deferring true profitability. And I guess it also raises the question of why Elon Musk felt it was so important to say they were going to do 5,000 a week at the end of this quarter and to basically pull out every stop and stretch the organization as much as possible to get there if it wasn't to try and preserve access to the capital markets where he thought he might have it otherwise.
So Elon Musk is obviously a unique person, and he is intensely competitive. I've never met Elon Musk, but I've met a lot of people who work close with him. And so I think there is a lot of competitiveness that goes into him doing that. I think that getting to the capital markets, they don't need the capital markets over the next few months. And so I think that was less of an issue. I think he was really trying to inspire and show what Tesla could do. But I do want to acknowledge that this is the kind of the unpredictability around Musk is one of the negative factors around this story. And as someone who believes in it, I wish that he wouldn't set these big targets that they have to really stretch to get to.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.